Good afternoon, good evening, everybody. I guess it's sort of at that borderline. It's 5:32. This is June 9th, and this is Jeff Scott, and welcome to this rendition of my weekend review and top-down analysis. I apologize for not doing one last week. I was in Chicago at the annual Cancer Doc meeting. I had planned on doing something with Dr. Glardy this week to review some of the different drug companies that you might want to watch. Sometimes best of intentions don't necessarily happen. We'll look to do something soon. In addition, I do plan on talking about some of the drugs to the companies today. Now, up to the last 2 days, we were probably going through the correction that we anticipated and expected. And so one wonders, was Thursday, at least the last hour of Thursday and Friday, an oversold bounce, and we'll have the correction continue, or is the correction over, and was this another shallow, well, not so shallow as you'll see, correction that we've had every other month or so since November of last year. So let's take a look and see what we can come up with. Disclaimer, this is for education purposes only. Anything I discuss is for education purposes only and not investment advice. I'm a doctor, not a broker. Most physicians lose all their money with their investments, and I am currently still independent and not affiliated with any specific software vendor or company. The tools I demonstrate are tools that I use in my daily trading. Excuse me, and I paid for each of them. I show this often, but it's meaningful to me in that I don't need 100 programs to trade. I need a real-time platform of which I split between two, TradeStation and TOS. I need an analysis program and scanning program, which I use High Growth Stock Investor, now known as HGSI. EdgeRater is a backtesting tool. ETF Bandit automates some of the Connors products for ETFs. I like Magenta for seasonal analysis, and then I depend a lot on Ian Woodward and Ron Brown's learnings, which have been adopted nicely by HGSI. I put this up frequently. The important thing here is you got to take your own responsibility. Nobody, myself, Ron Brown, or anyone is going to tell you what stocks to buy and sell and when to buy them. And frankly, the most dangerous thing that I found in my years is that if I tell somebody something looks good, I may not remember to tell them when I'm selling it. So then they get mad at me because they think I told them what to buy and when to buy it and not when to sell it. So that's why it's important that you really take control of this yourself, and that clearly that is the point to me of why I do teaching and things like that, is to teach you to be your own guru and not rely on someone else. And those are words of wisdom that I learned a long time ago from this guy here, Ian Woodward. I'm not going to spend much time here. These are some of the books that I've read, some of the people I've paid attention to: Elder, Woodward and Brown, O'Neill, Morales, Katcher, Van Tharp, Bigelow, that help to shape what I do in my trading. Lastly, I often will refer to stocks as something I'm interested in buying. It is 5:30. The future market's not open yet. I have no idea what tomorrow is going to look like. So how do I know what I'm going to do? I don't. I'm willing to figure out if my bias is long or short, and based upon that bias, I'm going to put together a list. And then if the market goes the way of my bias, if the sectors that I've identified tonight are strong, then I want to buy the best stocks in the best sectors. As always, I'll look at the market with a number of tools, then go into HGSI, from a top-down approach, a few shortcuts, and then say goodnight. So without further ado, let's jump into some of the things I like to do. So I always like to start with a sense of what the market is doing. And as I mentioned, the futures are not open yet, so let's just take a look, make sure they haven't opened yet. I assume they're not open yet. I think they open closer to 8 o'clock. So if I go here, pre-market data. So they dropped some after a huge run-up during the day on Friday, but the market today has not opened yet, so it'll be interesting to see. And Friday was a strong day. I think we all know the Dow was up big, over 200 points. NASDAQ was up 45, and the S&P was up 20, almost 21. So let's take a look at some of the different things that we might use. So one thing I like to do is to go into my Elder tools and pull up the NASDAQ and take a look at where the market is. So we saw a pretty robust, and we'll measure it in HGSI. We saw a pullback. All right, so the upper, we got above the upper envelope and pulled back, not quite to the lower envelope. You can see several days of red, and then we had a gap up on Friday, closing near the high of the day with a green price bar. Blue on the weekly, green on the monthly. As I mentioned previously, we have sort of taken out the negative divergences, and you can see the MACD, both the lines and the histograms, got higher highs as we got up here compared to the past. So that's good. It'll be interesting to see if we can rally back up to the top from here, or if this is a false, I don't know if it's a false breakout, but a false rally. If I look at the Dow, same, went from above the upper envelope in about 1 to 10 trading days to below the lower envelope. Big bounce on Friday, green, blue, green, and again higher highs on the MACD with this peak, at least on the lines, and compared to this peak here on the histogram. S&P 500, I would expect it to look the same, and it does. Well, wait, that's still the Dow. My bad. Now it's the S&P, and again, several red days, a pretty big pullback to the lower envelope, and then a big bounce on Friday, green, blue, and green. So looking at the market this way, and with no knowledge of what the futures will be, big snapback day on Friday. The green is reassuring because we know in Elder speak, you can buy or you can hold on green. You shouldn't be selling. So maybe the correction is over, and this was deeper than the previous ones, but we're going to take a look at it specifically in HGSI. Now I can tell you that I wasn't overly surprised to see us bounce, and I wish I could do these numbers intraday, and I think I can, but that means I have to be at my computer intraday. So end of day Wednesday, I thought that the market had gone too far down too fast. Not to say that it can't go further down, but 78% of stocks in the S&P 1500 were trading below the mid-band. Nearly 25% of stocks in the S&P 1500 were below the lower band of the Bollinger Bands. And if stocks spend 95% of their time in between the upper and lower bands, and 25% of the stocks are below the lower band, they don't stay that way. So one certainly would have expected a recovery. And what we saw on Thursday with the late rally, you could see that the number of stocks below dropped from 25 to 4, still predominantly red in the pie. And then now we're sort of in 50-50 land, and we have less and less stocks above or below. So Ian's buckets, although they certainly can get worse, I was impressed mostly not just by the 78, which is interesting, but I've seen it get higher. 25 below. If you look at the last two deciles, 12 and 730. So over half the stocks were near the bottom. And if you go back not that many days and look to where the market sort of topped at, saw the same exact picture. Let's see if we get to it. Yeah. Well, we saw a picture back here where the majority of stocks were at the upper 20% or above the band. So by edge rater, we have a market that is still bearish slightly with 55% red, but really doesn't tell me which direction it's going to go. So neither bullish or bearish in my tone on that one. I like to see where we came from. And this was not a particularly good week for me, although, as I always say, these are lists compiled on the previous Friday. Assumption is we look at what happened over the next 5 trading days to see how the individual lists perform to give me an idea of what's working and what's not working in the market. In reality, no one's going to not manage a list. Now, I didn't have time to do my complete analysis last week, so I have no buy list, but I did want to capture what my typical list did to get an idea. So first thing is S&P 500. Find it, is up here, was up 0.78. You can see that the IBD 50 clearly underperformed for the week. So it was not necessarily a great week for growth stocks. I performed a little bit worse than at least if I had kept my holdings the same, than the IBD 50. Top 5 from Smart Groups, even worse. And one of my best lists when growth stocks are working, the squeeze filter also down about 1%. And even top Bongo buys and Best of Woodward and Brown were slight losers. So a week that did not favor growth stocks. What was favored, Bible gap ups performed well. There were 5 noted on the prior Friday. For the week, 5 were up, no losers, up 1.8%. Relative strength seemed to do well this week, as did fastest growing. But in reality, a fairly narrow week compared to some of the ones we've seen previously. So let's jump into HGSI and take a look at the market from an HGSI perspective. So I'm going to go down to Woodward and Brown user groups. I'm going to go into Major Markets Plus. I'm going to use top-down view because it gives me sort of a balanced over several weeks, a little bit weighted to more recent, but does look at a little longer time frame. I'm going to mark it on raw combo, ranking. And what do I see? I see the Dow, transports, the NASDAQ are up at the top, and our friends gold and silver and the small stocks are down at the bottom. So NYSE is a big mixture, so it's also further down, as is the S&P 1500. But the big stocks, at least from the Dow, seeming to lead. Not a whole lot of movement this week at the end of the day. Oil and gas were up over 4%. Utilities had a bounce up 1%. The worst performing was volatility, as usual, down 7%. Interestingly, the dollar and gold were down on the week, and silver, and bond iShares were down as well. Let's take a look at a couple of these. And I like to let's start with the Dow, which was the leader, although a leader only up about 1% for the week. So when I look at the Dow, what do I see? I see a Dow that corrected. So pull back to the 50 on Thursday rather, and bounced. And again, if you think about what I showed you on Edge Rater Club, we pulled back hard on Wednesday. We crossed below the 50 on Thursday rather, and then intraday traded back above and closed with a strong finish, and then a gap up on Friday. A Kahuna on Friday, mostly green on the momentum indicators, a DI crossover, and a green candle low on Thursday. As I look at this, I'd like to see us get up above that 17-day moving average, but it looks to me like the 50-day held. How about other indices? Let's take a look at the NASDAQ. Similar pattern, although we did not get as close down to the 50. And again, we got to get above this 17-day, a DI crossover. Thursday, you had a green candle low, kahuna on Friday on the NASDAQ. I take a look at the S&P 500. Let's do some math here. You can see some of the prior declines, 3.5, 3, 3.7. Let's take a look at what was this correction, and was this enough? Intraday high, intraday low, 5.3% correction. So it may turn out to be, we'll see, this may have been the correction we were waiting for, although it's still summertime, and June is traditionally a bad month, not a great month in the marketplace. You can see kahunas on Thursday and Friday, and again, a beautiful pull back to the 50s. Done this before, and this is a natural place where we should have expected it to bounce, but we need to be certain that we get above the 17-day quickly and not become a range bound between the 17 and the 50. I like the NYSE because the NYSE is a large, very large universe of stocks, mixing of big, small. And again, this one undercut on Wednesday the 50, closed on the 50 Thursday, broke above the 50 on Friday. It too needs to quickly get above the 17-day moving average. The S&P 1500, another way of looking at small, middle, and large. And, you know, we talked here, I talked here, likely a pullback, and when we pull back to the 50 or all the way to the 200, it looks like we got the pullback to the 50, and it would not surprise me to see this bounce continue and us to move forward. The VIX, not the friend necessarily of a person who's long in the market. And you can see once again the VIX shot up with this correction and shot right back. Now if it bounces on the 200 and heads back up, that might be more worrisome for this bounce to continue. But the VIX is falling hard. And then the dollar, which has been sort of interesting during the long rally, dollar weakness was good for the market. I guess improving economy may look like dollar strength. And a firming Fed should improve the strength of the dollar. And with the concern, let me back up. And with the dollar falling off for the last 10 days, down to that 200-day moving average, it's interesting that the market sold off in that presence, although we really had a big sell-off in the dollar on Thursday and Friday, which supported the bounce in the market. Dollar's at a pretty critical place here. It looks like it's bouncing at the 200. And although of late the dollar and the market have worked in parallel, we can't forget that for much of the last 3 years, a strong dollar has not been strong for the stock market. Take a look at USO for oil. Let's look at gold first. Still can't get above its 50-day moving average, clearly in a bear market. A kahuna down and a pocket pivot down. The DI crossover, so gold remains weak. Silver, perhaps not as weak, but actually, even though it's going sideways, it had a tough Friday as well. So equally as bad. And oil, black gold, seems to be in a relatively narrow range, price-wise around $94, and you could see USO going sideways. But a kahuna on Friday getting above the moving averages and a DI crossover. So my take on the markets may be different than yours. 5.3% correction in the S&P 500, held at the 50, big bounce on Friday. We may go sideways from here, but my feeling is short term, perhaps we've seen some of the worst part of the correction. Then again, it's still the summertime, and nothing would surprise me, and I'll be watching the futures just as you are. Next, I'd like to look at our industry groups. You can see there's 146 groups in HGSI. I'm going to look, I don't want to look at 3 weeks performance. I want to know what's working right now. So the 2-day force up is 91 groups. That's a huge number considering how weak the market has been. But I think it reflects what we saw on the last 2 days. and that would mean that the Force 2 down should have less groups, which has only 7. So looking at what's bad, interest rates creeping up. We talked for a long time that MLPs and REITs that seem to prosper in a setting of falling interest rates. When the rates go up, these may suffer. And REITs did poorly. Precious metals and gold did poorly. And coal, well, coal's been doing poorly for as long as I can remember. So let's start with the top one here, automobile manufacturers, certainly led by Tesla, but there are other things that look interesting here. So Tesla is probably not for the faint of heart, had a huge run-up and a correction, pulled back to the 17-day moving average. Kind of even looks to me like it might want to run again. It trades at a price-to-earnings ratio that, well, it doesn't make one because it hasn't made money yet, but I think it's the last quarter it did have a small profit before some extraneous charges. That's an expensive stock, certainly a momentum stock. GM got added to a major index, which increased the buying. Now, you look at this, everything is green and had a Bible gap up on, actually it must have been on Tuesday before a tough Wednesday. Multiple pocket pivots of late, huge volume on Thursday and Friday, probably related to index purchases. Earnings per share growth is still dismal. At some point, the stock probably turns around, the company turns around. Stock certainly is a lower left to upper right leader. Thor Industries and Winnebago, hard to believe, but maybe the housing recovery, people are feeling better. Thor Industries had a Bible gap up on Friday at Kahuna. This is one of the motor coach companies, trades at a multiple of 17.7. Sort of breaking out after a pullback. And Winnebago is one that I've been watching and in and out over the last couple of weeks. In a pullback, hammer on Thursday, gapped up on Friday, DI crossover to Kahuna. So these might be an area to look for, fairly priced, not overextended. Overextended was a theme as I went through about 600 charts today. A lot of interesting things, but a lot of overextended. Now, since Force Index consists of two components, it consists of a component related to price change. The second component is volume. Those stocks that have massive volume will be at the top of whichever list they're in because of price change. And no surprise, diversified banks are here, but look at the volume average on these banks. So we just take a look quickly. A lot of regional banks made my scans this week. So Citigroup, nice uptrend, pulled back, had a nice day on Friday. Bank of America, same chart pattern, uptrend, pulled back, bullish candlestick on Thursday, gapped up on Friday, sitting at the 17-day moving average. And JP Morgan, similar pattern, probably. I like this one the best because it's held, got above the 8. It looks like it wants to run again. But diversified banks look good. Now biotech. Biotech had a great last 2 days. It had a horrible prior 5 to 7 days. Those who've been following my webinars know that I like to look for growth stocks with good earnings momentum that have a pullback to major support. And then I like to jump on that stock when I see something happen, volume, a Kahuna, something that shows that the stock has changed. So Regeneron certainly met my criteria. And I'll go through the top 4 or 5 and make some comments on them. But Regeneron, this is what I love this. Pull back to the 50, and then typically I would have set my buy stop when it took out Wednesday's high rather. I think you probably still could have gotten into it Friday after the market opened. 2 pocket pivots in a row, a Kahuna on Thursday. So just, this is an expensive stock, so don't look like much, but it had a pullback, the lowest point of about 20%, and it's had a bounce from that point of 14%. So this is a great company, very exciting portfolio of products. It gave you an opportunity to pick it off close to the 50-day moving average. Speaking of the 50-day moving average, so Gilead, Ariad, Amgen, Celgene, and most of the oncology-related companies sold off over the last couple of weeks. ASCO abstracts come out, I believe, the third week of June. The analysts did not see what they wanted, and it began a sell-off, which reached a crescendo during the ASCO meetings. I think for many of them, it wasn't bad news as much as it was buy the rumor, sell the news, and take profits. So they've sold the news, and now we've got some things setting up that look interesting. Here's Gilead. Not great earnings per share growth right now, but if I remember correctly, Gilead does have some interesting stuff going forward. So let me just pull up, as you know, I like to look at MarketSmith on some of these earnings questions. Let's see if we can find anything out about Celgene. I believe that they do have some big earnings coming into the stock soon. All right, perfect. So Gilead has got best-in-class HIV franchise. It looks to have one of the best-in-class hepatitis franchises, and it's recently acquired a number of preclinical oncology companies so they can build a best-in-class company in cancer care. You can see it does have some earnings per share growth coming in 2014. Which is good. And you can see that it's given many buy opportunities in the past when it came down to the 50. And it's sitting right on the 50 right now. I think if the stock trades up on Monday, you can buy it, and you put your stop either under the close of Friday or perhaps under the 50. If the market opens up down and this gap's down, well, we're going to let it come down a little bit further before we get interested. The next one, Celgene, a very similar pattern except it got below the 50. Now, I'm still long Celgene. I thought that they had an outstanding portfolio and platform that was presented at the cancer meetings. There is a decision that will come out of the Europeans this year about whether or not they're going to approve their blockbuster lead drug Revlimid for first-line use in multiple myeloma in the EU. And that is going to be the big market driver. I don't think the street saw enough data towards that at the ASCO meetings, and therefore the street punished them. I think it's overdone. And again, I'm not stupid, and I got to see what the market does before I make much of a decision. But 2 kahunas in a row, I think the stock is bouncing back, and it's going to get back above its 50 and the 17 in a very short period of time. Vertex did exactly what we thought it would do. Had a huge pop here on some cystic fibrosis data, and then did sort of a flag, has been trading sideways. I think this stock goes to $100. It's had a pocket pivot on Friday, mostly green on the momentum indicators. Not at the top of the high jump bar. We'll come back to that in a second. It had a kahuna. Just take a look at this. The high jump bar said it's going to go sideways or pull back, and it did. It took some of the exuberance out, and now the high jump bar is more in the middle, not suggesting a top. I think the stock moves from here. It's certainly one to watch. We already looked at Regeneron. Ariad, this is one of my bad calls. I keep coming back to it. Got their drug approved on this bad day here back in December. The market sold off hard on the news because of a black box warning. As a cancer doctor, I continue to believe that their black box warning is no worse and probably less bad than the similar warnings in some of the other products that it competes against. They also had data about a new class of drugs at the ASCO meeting, and they too had a 1, 2, 3, 4, 5, 6, 7-day sell-off and a bounce on Thursday and Friday. Less optimistic here because it's got to stay above that 200-day moving average. A 2 out-of-pocket pivot, all green on the momentum indicators, and a big kahuna. So stuff to like. We'll see what happens. Biogen, this is the big daddy. Their most recent accelerant was the approval, at least of ODAC, or the MS equivalent to ODAC, approval of a oral MS drug, or suggesting that it'll be approved. It'll be the first oral MS drug, and these guys are the champion of the orphan and MS world, major pricing power in MS. And you can see it too had a deep pullback to its 50, and kind of like Regeneron, it's a fairly substantial pullback from top to bottom of about 14%. So it's bounced at the 50. It's an expensive stock. I think there's a pattern here. Amgen, less excited about this one. I don't think that short term they're going to have the same kahunas as some, I mean, no pun intended, as some of the others, as some of their more mature products in the growth factor world are probably going to lose exclusivity with some of the biosimilars coming to market. Don't know much about Acadia. There's a couple of these little guys, and I'll look at Acadia, and then Mankind is another. They make almost no money. They have very few products. I don't know anything about this guy. All right. They have a number of things being studied, and if these things get approved, the stocks take off, a la Medivation. And if they don't get approved, the stock dies. So one of the ones that I follow and that I own is Mankind, MNKD, and I own NPS Pharmaceuticals. These are sort of flyers. So let's just take a look at, and whoops, there's Medivation. Doesn't look like much there, but it was a great story here before the drug got approved. And most of these companies, they run while the drug is still in trial, and when buy on the rumor, and when it gets approved, they pull back. So Mankind has a new diabetes treatment that's in late-stage clinical trials, and it's a similar pattern to that Acadia, where it bumps up in steps. I own this. I have my stock, I believe, is at the low of the wick here, of the candle, not at the wick. And I've had it for a little while. I'm making some nice profits on it. Like that one a lot. Another one I have, NPS Pharmaceuticals. And again, another company. This one does have some earnings. If I remember, let me see if this one's got earnings coming in. Let me go into, yeah, this is a stock that's going from developmental to actually having earnings, projecting 40 cents next year. So this stock may be one to watch as well. And then another one I like, again, preclinical, nice stories, but nothing marketed, is Celldex Therapeutics. And it's gone sideways for quite some time, broke out to a new high on Friday, a couple kahunas in the last couple of days. And I find this one interesting. So you can tell where I think there's a lot of excitement. It's in biochemistry. Now let me go back. All right. I messed up, so kind of, sort of, but not really. So let me go back to my industry groups. Here we go. System, or the pharma itself. Now, these guys had sold off. They have big dividends, 3% for most of them. We'll just talk a little bit about Pfizer and BMS. Elon is more of a arbitrage play, as there's some deals around that stock. So Pfizer sold off hard. It was probably the star at ASCO at BMS for their next generation cancer medications, their immune therapies for cancer. Still a ways to go, But the reason why a lot of people like Pfizer is you buy it on pullbacks. It's got a 3.4% dividend. It's got to get above that 50-day moving average for me to feel good about it. Quite a few of these are buyouts. BMS is another one. Now this one did not sell off much from ASCO because of all the excitement around their PD-1 and PD-L1 drugs. And it kind of looks like a small growth stock, doesn't it? Doesn't look like old stodgy BMS. They've remade themselves. I actually was on a call there once. They said, we're no longer a big pharma. We're a medium-sized biotech. But you know what? That's good for their stock. I think their oncology products are extremely exciting for the first time in a long time. Clovis doubled at ASCO because of some of their data on PARP inhibitors. I don't get it. They have a number of competitors. I think this might be ahead of itself, but they certainly had a big move as some of their positive data came out. Market cap of $1.8 billion. Often these things get to $3 or $4 billion before their drug becomes approved. And then one of my favorites has been Valiant. The next two I like, and then I'll move forward. Valiant has pulled back some, close to that 17. This might be a place it bounces. If you look at Valiant and you look at a little deeper on their fundamental story, VRX, you can see, unlike most of pharma, it's got no dividend, but it has massive growth. And they're using their earnings growth and revenue to make a number of purchases and will continue to expand, I believe, with new additions. And then Santoris has been an HGSI wonder kid. As it's grown from the low single digits to over $20, it too pulled back down to the 50s, almost a Morningstar type pattern. And it's moving up. I think this one goes to new highs, and it's another one that I own. So that's enough of pharma. A lot of excitement in pharma and biotech. System software. So what I do is I go through the top 10 pretty much every night, and when I do these webinars. Microsoft's been on a great roll. A new, I don't totally understand it. It had a new generation of Windows. I'm not a big Windows 8 fan. Office is new. That might be what's driving it. New Xbox is driving it. Breaking out to new highs for quite some time. And I believe they also pay a small shrinking dividend of 2.6%. Hard to believe that Microsoft is a leader again, but it is what it is. Investment banking, I liked Morgan Stanley. It's a lot cheaper, and I don't mean dollars and cents, than Goldman. So we just compare them. We look at Morgan Stanley. We see a company that's growing into 14, 20 times, trades at a multiple of 58. So it's expensive by multiple. Goldman Sachs looks at $15, almost no growth, and trades at a multiple of 11. So both of these trade at a premium to their growth rate. Morgan Stanley had some upgrades, taken up recent highs, nice lower left, upper right kahuna and a pocket pivot, everything turned green on Friday. I think Morgan Stanley looks very viable at this point. Internet software and services. Look at Google and Baidu. Now, I don't know how to buy Google. It's an expensive stock. I guess I could be buying deep in the money calls. I could be doing verticals. Pull back, big hammer on Friday, 2 days of pocket pivots, DI crossover, mostly green. Looks like it wants to go higher as well. Hard for me to put a valuation on Google. Someday it's going to stop going up. I don't think that day is yet. And you see earnings per share growing basically 50 times a year. Trades at a multiple of 21. So $50 a year growing at a multiple of 21. Revenue, earnings of 50, growth rate of about 15%. So theoretically, it could trade as much as twice its growth rate. So maybe it is a $1,500 stock. Probably is undervalued, probably goes higher. And I've had a lot of woulda, coulda, shouldas on the price lines and the Intuitive Surgicals, Google, and Apple as the prices get pretty hefty. although there are option strategies that I can play them. Baidu, I put this on my buy list sort of as a bottom fish. 2 kahunas, a pocket pivot, everything turning green and breaking above the 200-day moving average. I kind of find this to be intriguing. When I looked at the earnings per share, I don't think it blew me away. I don't think they're as good as Google's, but they're not insignificant. Trades at only a multiple of 20. Out years growth of 26%. Still in a downtrend, and I probably want to be very careful if I was to nibble here with my stop, not far under the 200-day moving average, but multiple kahunas in a row can be a sign of the stock turning around. Communications equipment, bunch of networking stocks. I don't really know these, so I'll just take a quick look at the top one to see if there's anything interesting. And yeah, big breakout day for Ciena on Thursday, gapped up, Bible gap up on Thursday, big day on Friday, Kahuna on Thursday, tons of volume. I suspect they probably had some positive news, maybe earnings. Let's take a look and see what it says. All right, so it must be on earnings. Pick up in revenue and earnings. So Ciena was a beaten down stock, I believe. You go back a couple of years, and they bounced on earnings. Might be a place to go look at. Listen to the transcripts. Number 10, semiconductors. Changed index group, and stock I've learned not to hate as much. Micron continues to outperform, up 8% for the week. And I think what's happening here is a lot what's happened with airlines. Airlines are taking out production by pulling seats, and the semiconductors are doing a lot of consolidation, taking out manufacturing. And when the manufacturing gets less, you have growth. Big mover getting extended. You can see the high jump bar is married to the top line there. Just taking a step back and seeing what else or what's not there. We haven't said anything about an energy stock yet. You can see oil and gas exploration, equipment and manufacturing, storage and transportation, and drillers are all on the positive list, but they didn't make it into the top 10. Home improvements number 11. Home builders are down to number 25. And let's take a quick look there, as they are clearly, as a group, showing some evidence of a correction. I think the last thing I read was they're in the 5th inning of their move. But what a beautiful correction. Excuse me, I love when it works this way. D.H. Horton pulls back almost exactly to the 200, tests it on Thursday, opens up with on Friday. A doji close, which I have to wait and see what it does on Monday rather, but this is one that consistently outperforms its estimates, and the softness was simple: rising interest rates, lower home sale numbers. If you sell less homes, the home builders make less money. All right, enough of that. So now we've done top-down investing. We've identified a number of stocks. What else might I want to do? Well, those who've been here before know how much I like the group inclusion filter. So I already ran it today, so I'm not going to run it again. And what I found, and we can look at these very quickly. When I ran the group inclusion filter, OCN, Jazz, Soda, these are the stocks that were up at the top. Some of these we've seen before. And then what I did is I threw them into a designer group, a group inclusion filter all-stars, put it in a warehouse. Let's take a look at some of these from a top-down perspective. So these are stocks that actually, from a bottoms-up perspective, we're not necessarily looking at the sector. in identifying these. Krispy Kreme looks like a shooting star, so I'd stay away. Everything is green. Had a Bible gap up at the beginning of the week, pulled back a few days, and bounced the last 2 days. Webcom, I like this guy. What I like about it is I believe it's got over $2 of earnings projected for next year. It's a stock that couldn't get ahead of itself, was basing forever. $2 in 2013. It trades at a multiple of 11. It's growing much faster going forward. It's in the right space. Probably want to take a look. Gapped up with a pocket pivot and a kahuna on Friday. Oasis Petroleum breaking out to new highs. A couple of kahunas, one red, two blue. And again, this was another stock that I was impressed because of its earnings per share growth. Take a look at that. You can see the growth rate almost double what the multiple is. That's my kind of a fundamental, because it's a stock that is clearly poised to go higher. Ligand is another biotech. I think most of what they've done is developmental, and their products are licensed. When they actually sold products, it was kind of a dog, and now they're an all-star. So sometimes your R&D drives you more than your sales do. And you could see a beautiful move up off the 200-day moving average here at about $15, a double since November. Probably getting ahead of itself, but a very impressive run. Now look at these earnings per share growth. So the stock is also turned around and is now becoming a growth stock again. OGND. So you can see almost $1 in 2014, 68% growth rate. It's probably not going to keep the PE of 164, but this may be poised to go a little bit higher as well. It has a market cap of $650 million, and as it continues to advance products, you might see some nice movement. Thor Industries, we looked at already, one of the motor coaches. Lumber Liquidators, pretty deep pullback with the housing correction, had a kahuna on Thursday. My concern with Lumber Liquidators is its growth rate and its PE. I think it's at best fully valued, and you could see 288, 19% growth rate, multiple 42 as we get into 2014. Hertz Global and Avis both look the same. Modest pullbacks through 200s, some kahunas. Going to run again. Centeris, where we looked at. I happen to like MPEL, big macaw footprint in gaming. But multiple media games, hard to argue. This Bible gap up here, Bible gap up here, and it's running again with a kahuna on Friday. Everything is green. It looks like it wants to move again. I don't like about it is its current earnings growth rate. But let's see what we get on multi. And you could see, I guess you could argue $1.20, 20. If it's getting 25, does that mean it's going to be a $30 stock? I don't know. I think this one is more fully spent. MPEL, you can see higher growth rates, PE less than growth rates. I see this being a potential $35 stock next year. So I'm a fan of MPEL more than I am of MGAM. Lithium Motors, not much to say, sort of going sideways, ready to break out. Jazz is one of the ones we talk about a lot, and the reason why I like Jazz has a lot to do with VRX. Jazz is not a big company. They trade a decent volume, average volume of 875,000 shares. Look at the earnings per share growth, twice what the PE is. It takes those numbers, the stock goes up substantially from here. Well, that was the top 10 or 11, so just by looking at that group inclusion filter. Another thing that I might want to do is just go into all securities. and drop my sprinters. So you find sprinters by going into HCSI Strategies, Woodward and Brown, Reference Library, Miscellaneous, Sprinters One Step. And these are some of the best stocks in the market right now. I want to point out a couple of things that are different here. We've seen many of these. A number of auto parts. Not only, the Winnebago, Thor, Tesla, GM are auto manufacturers. A lot of auto parts companies made my list this weekend. So one of them is Magna International. This is a stock that I think even flirted with bankruptcy. I suspect all these companies have done stuff to divest them of some of their risk related to pensions and health care. But what a great move in MGA, Magna International. And I look up here at its earnings profile, and I'll show you my favorite. $6, 17%, that's a $100 stock. I think this stock has a big move. It trades at a relatively low multiple. The one that I'm pushing, that I own, not pushing, wrong word. The one that I own in my account is American Axle, which is AXL. All right, I give up. All right, see what I can do. We'll find it a different way. So these are some of the stocks that make Sprinter. Now I know a lot of people ask me about what am I looking at, and I'll get Axel this way. So here's my buy watch. Go to scorecard. I know what the problem was. I had a filter on. Dum, 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 dum. How long have I been doing this, Jeffrey? All right. I think auto parts make sense. And this is one that I like. It's called American Axle Manufacturing. And this was a dog with fleas. Could not break out of this, and it was much, much lower in 2009. And it's now going hyperbolic. And what's driving this is what, to me, always drives stocks when they move higher ultimately, is earnings. And you could see the amount of earnings coming into the stock. Multiple 21, growth rates in 13, 47, 52, and 14. $2.68 at 21 multiple is about $60 a share. It's trading at 18. That's why I like American Axle, and I've had a nice run up here as well already. If I put it on industry, pick out a couple of Wolfpack. So we talked a lot about biotech. We talked about internet software services. We talked about pharmaceuticals. Now, Hertz and Avis are in trucking, but I also saw some interesting trucking stocks as well, and I think you might see some opportunity there as well. Here's Roadrunner, up, pull back to the 50, up, pull back to the 17. Looks like it wants to run again and had a kahuna on Friday. So I think there's a lot of neat things here and a lot of neat ways to find them. I'm starting to get tired, so let me take one more step at this. Here's one that is a potential bottom fish. Probably a lot like Q4, where there's a number of short sellers that hammer Unipixel when it runs up. Now, it pulled back abruptly, got cut in half, and it stopped at its magical 200-day moving average. Now, the question here is, are management good or bad? And part of the short seller's argument is that management promises but doesn't deliver. Look at the earnings for 13 and 14. I would argue with that growth rate and a turnaround play that this is not a $20 stock. It's probably a $50 stock. So if those numbers are anywhere close to accurate, if they deliver on their touch technology, which is apparently better than what's in the market today, I think the stock moves, and I think you have the opportunity of buying it at a very good price right down on top of its 200-day moving average. So one of my good friends, who should remain nameless, sent me a list of stocks. He remains nameless because he didn't give me permission to use his name. So I'm going to finish by quickly going through his stock picks, and there were several of them. First one, and this guy is an energy expert and all-around nice guy. So let's close this down. And charting module. Turn off my filter. P. All right. Try this one more time. I've got to have something on here that I'm not aware of. So let me just shut a few of these things down. And let's see if I can't get this to work. And if not, then I'll make a quick user list, and then we'll be done. All right, my computer is not happy. So let me just create a group. And we're going to call it the L group. All right, this is a computer story. I must have hit something that I didn't want to hit, and I'm messing with my keyboard. All right, let's try the old Control Alt delete. Task Manager. Sign out. All right, I guess maybe I got it fixed. So let me just do this. So let's go back here. PPPC, PPPC. So something I'm doing in my computer, I must have done something on the keyboard because it doesn't make sense. All right, I'm going to do this one more try, and if I can make it work, great. If not, you guys are probably already hung up because it is way long in the tooth. So. Oh, stocks. All right. So, PPPC is one. Shutterfly, SFLY, is another. ISIS, speculative but a big mover. NPSP, one that I like, already showed you. I think that's what he was asking. Let's see if there's anything else. I think the reason why it's not PPC, it's PPC. All right, Pilgrim's Pride, I did look at that one as well, looked nice. So I'm going to look at my friend's stocks real quick, and then we will say good night. So let's go down here, user group, wrong button, find L stocks. All right, so ISIS is a biotech stock, cancer drugs and other drugs. A number of drugs in development. They did have some good news at ASCO. You can see a move off the 50. Nice uptrend here, Kahuna here. Everything is green. The problem with ISIS is that, it's a risk stock, and you may want to have some of these in your portfolio, but probably not a complete portfolio of stocks that don't make, that don't make money. As you can see, their earnings, although they do have some revenue. That's ISIS, very speculative, but looks like it wants to break out to new highs. NPSP, again, a similar story, although a turnaround with earnings coming in. Pull back, wants to run again. I already said I like that one. Pilgrim's Pride, chicken is good. I believe this is the chicken player. Packaged meat, poultry, slaughtering, and processing. Bible gap up on Friday. These have been working with the Kahuna, huge volume, and it's setting up a pullback in an uptrend. I think that looks good. Maybe it's run too much. Maybe you should let it come back. Maybe it will never come back. It trades at a multiple of 19, and you could see short-term a big growth rate. Shutterfly, again, another one breaking out with a pocket pivot and a Kahuna. Doesn't make money, which is sort of against my nature. I like stocks that make money unless they're a pre-launch drug company, and that takes care of that list. So everybody, thank you so much for joining me. I am planning on, as we speak, to do another one of these on Father's Day weekend on Sunday. then again, maybe I'll be shocked and my kids will do something for Father's Day and I won't have a chance to get it. Watch the market indices. Be careful. I think we are still at a place where it hasn't declared which way it's going to go. We had a great day and an hour. As you can see, futures are now open and are down pretty big, although it's early and things have a tendency to change. So big day on Friday. Maybe we'll get a little backfilling and move up beyond that. Maybe the correction's still on, still early to tell. Trade with the market at your back, not in your face. Have a great night, and we'll see you soon. Thanks. Bye.